Hello, everybody. This is Ron LeGrand with another Ask Ron. This is a first. I am actually doing a selfie to answer your questions this week because there is no one else around right now. Okay, so I have to read them before I answer them, so forgive me. First one's from Michael Collins in Minnesota. Michael says, do mobile homes depreciate in value faster when they're not on private land? Michael, where the mobile home is parked has nothing to do with the depreciation. Okay, it's just like cars. They depreciate over time. And of course, the worse shape they get in because they're lived in, then the less they're worth. But they're still going to depreciate if they're sitting on the dealer's lot brand new. Okay, the next one is from, I can barely read it. Perzina Munroe, M-U-N-V-E, I don't want to massacre, M-U-N-R-V-E, don't want to massacre the name any more than I already have. Can you do the one-time setup fee of $500 to get started in Dreams and remain with the present monthly fee? The answer is no, huh? The Dreams only comes with a $297 level, and the $500 fee, it also covers you getting a VA. So you can get a VA at the $59 level, and you pay one $500 fee to either do that or activate the $297 level because it includes your websites. They have to set you up with your websites and your buyers list and your dream site. So you jump to the $297 level when you're ready to do some business. All right. And I got one from Shawna Wessel, Colorado. I checked out the online reviews for both Quest and NewView, and both complained about their poor customer service. Do you have a company you can recommend where the customer is happy? I don't put any stock in somebody complaining about poor customer service because, frankly, more than half the time, it's their fault, not the company's fault. I have worked very closely with Quest over the years, and I've never known them to get poor customer service. So if they did, and even if the complaint was valid, I'm sure it was a fluke. You're not going to find anybody that's going to give you any better service. Some people get confused about customer service when they're they're not going to do anything but get you to comply with a law and send you a form that has to be filed every year. And, they just can't do what they want to do. They got to do what the government makes them do. So that can easily be interpreted as poor customer service. But I've never had it, and I don't know where you're going to go get better, to be honest with you. Okay, Margaret Owens Harrison, Washington. Regarding the warranty deed to trustee, does the buyer or grantor sign the deed when it says seal? Yeah, you sign it right there. Or am I misunderstanding? The buyer doesn't sign any deed, the seller does, okay? So the seller signs where it says seal. The buyer does not sign a deed. And when it's a deed to a trust, the buyer's name, which I should say the beneficial interest of the trust, is not even on the deed because that's not disclosed to the public. Okay, got another one here. Karina, no state given. What happens if the seller defaults on the mortgage loan? Then what? Well, I assume you bought the property either subject to or owner financing, Karina. And if you bought it with a wrap, I don't ever pay the seller the payment. I pay it directly to the bank, so I'm certainly not worried about him defaulting. If I take it over subject to, it's not even a question. I'm going to pay the payment to the bank. Under no circumstances am I going to send a check to the seller for the amount of the payment and hope they actually write a check to the bank. I've never done that, and I'm not going to do it. And all that takes is for the attorney to create a little simple addendum for the seller to give you permission to pay the bank directly, something you ask them to do before closing. Okay, MK, no state given. How do you take over a reverse mortgage loan? Well, you take it over like you do any other loan, except, of course, when it's a reverse mortgage loan, if the lender finds out that the property's been sold, the chances increased rapidly that they will call the loan due because, once the seller dies or moves, that in fact, that loan is due because they're not receiving any payments on it. So that's not one they're going to ignore forever. Now, I can't tell you when they're going to call it due or for sure if they're going to call it due, but your risk is much higher on a reverse mortgage loan. Now, let's say you are buying the property and you intend to list it and resell it quickly. Okay, then it's all irrelevant because that loan is going to get paid off when you sell it. But if you're buying the property on a wrap, for example, you're wrapping that loan, you can do that, but you just got to know this ain't a long-term deal because sooner or later that bank's going to find out that that seller's not in that house anymore, and then they're going to be trying to call a loan due, is my best guess. So you can only take over a reverse mortgage if you're clear on your exit strategy and you're prepared to handle whatever happens. Other than that, you probably shouldn't do it. So that's all the questions for this week. I'll see you next week. Go out and make something happen.